Dear ladies and gentlemen, good afternoon everyone, and welcome to the webinar of Šiaulių bankas. My name is Justinas Juknys. I am an account manager here at Nasdaq Vilnius, and today's our guest presenters are the CEO of Šiaulių bankas, Mr. Vytautas Sinius, and Head of Finance and Risk Management Division, Donatas Savickas. Before we proceed with the presentation, I will briefly outline the agenda. Firstly, Mr. Sinius will introduce the bank's financial results for the year 2018, the draft resolutions for the general shareholders meeting, and company's plans going forward. Right after the presentation, we will open the floor for questions. I invite you to use the question box on the right side of the screen. All questions will be addressed after the presentation. First, we will start with the questions that we are received in advance, and then we will proceed with questions submitted online. Mr. Sinius, please, the floor is yours.
Thank you. Good day to everyone, dear ladies and gentlemen, dear analysts, investors. It's a pleasure to have you all in the webinar. And I know that there's very many of you participating, and I thank you for the interest to Šiaulių bankas. So as we have presented, I will briefly describe financial results of the bank, as well as give some indications on the plans of going forward for 2019, and also present several elements for the general meeting of the shareholders that is forthcoming in the end of this month. So let's go to the presentation page number 4. It's just a sec. I hope you see the slide number 4. So I believe most of you are familiar with Šiaulių bankas, but for those who are less aware of our institution, just key factors of Šiaulių bankas. So it's been established in 1992. The history as being listed company is from 94 in the Nasdaq. The rating of Šiaulių bankas is Baa3 with a positive outlook performed by Moody's. We're also in the country having the largest network of our branches, 62 outlets in 37 towns, employees above 800 employees, and assets of a group is 2.3 billion. So we are not the large bank in the country, but growing fastest, and have some unique position. I'll touch it a bit later. Talking about the group structure, we have quite straightforward group of several companies, so the bank itself and several subsidiaries, which all are 100% owned by the bank. So the main ones are the SB Leasingas. It's a consumer leasing and consumer credit company, which has have a strong market share in this business, and a life insurance company called Bonum Publicum. That is slightly smaller, the market share about 3%. So that's the two main institutions, and several subsidiaries which are involved in the real estate and investment management business. Talking about the shareholder structure, I would say have a quite fair split now between international investors and the local, approximately 50-50. So it's a good mix of different type of shareholders, including EBRD, which now holds 26% of the stock. So probably worth mentioning that recently they have increased the position from 18% to 26% after the conversion of subordinated convertible loan in the end of last year, and thus they are the largest shareholder of Šiaulių bankas. So most of you who were analyzing Šiaulių bankas financials some time ago were aware of some derivative instruments that were embedded in this subordinated debt instrument, but after conversion, all those deviations from in the financial statements that were related with derivative are gone, and that part is already in the past. Talking about the ratios, I think we have a pretty strong historical track of ratios like return on equity, return on assets. So I would say return on equity on average stood at the level about 20%. In some years it was above that, in some it's below this figure, but in general I would say bank is continuously generating in the past a good return on the equity. The same with the assets side. Last year was the most successful with 2.4% results on assets. Cost income ratios as well, I would say we are on very efficient way operating, and last year was at a very low level of 37%. And net interest margin has also a nice trend of going upwards, despite that the market is competitive, but we managed to keep a net interest margin at an even higher level than in the past. Okay, next slide is about the key elements on our balance sheet. So it's loans and deposits. So worth mentioning that Šiaulių bankas is now number 4 in the market, holding 6.6% in the loans market and 8.6% in the deposits. We had increased our market share in the last 12 months by 0.6 and by 0.4 in loans and deposits respectively. Probably worth mentioning a few words about the market situation. I would say we have currently quite concentrated market of 2 Scandinavian banks, SEB and Swedbank, and two banks which are currently mostly privately owned by the American private equity funds. So it's Luminor and Citadel. And Šiaulių bankas, I would say, uniquely positioned as a local player with a very close proximity to the clients. And I think we will continue work with our strength, and we see potential of further growth of our market share, both in loans and deposits and in some other businesses as well. And on the below charts, as you can see, that it represents a sector growth from 2017, as well as Šiaulių bankas performance. So we grew much faster than the sector did. Okay. Now a few highlights from 2018 results. So I would start with the net profit result. So it has been a historical year, 2018, with group result 52.6 million euros, and it's 64% more than in the previous year. And I'm also glad that we managed to make this high growth, not only from the one-off related elements, but also with recurring activities that grew by 14%. On the chart on the right side, you see both the net profit development by quarters, but also we've shown several cuts of the results which are on the recurring activities, and also with the recurring activities after income tax and allowances of impairment losses. So I would say the only last few quarters, third and fourth quarter, with higher impairment losses, made the results relatively lower, but overall 2018 result was really strong. Okay, let's move on to the next slide, which is highlighting the Customer service quality, again, I would say some record achievement for Šiaulių bankas to be recognized as the best customer service bank by independent researchers, SpecDive. And they made research not only in Lithuania but in other Baltic countries as well. And as you can see from the charts, that Šiaulių bankas has reached the top in Lithuania with 98.6% result, and we improved result, while other banks made some reduction of this ratio, and we managed to take the #1 position, not only in Lithuania but in all Baltic states, and that shows our consistent work with the clients. As I mentioned, being close with the clients in all the Lithuanian regions allow us to take in new clients and keep them with good products and good services. And the third highlight is about the loan portfolio. So it's a major income generating asset class for Šiaulių bankas, and we keep the good pace on the growth. As you can see, last 3 years having quite double-digit growth, and the last year was at a 17% growth, and yield on loans kept at a rather high flat level of 4.5%. So I'm glad about this yield on loans, despite the growth and despite taking larger clients, which normally expects lower rates. We managed to keep the average yield on loans on rather high level. Portfolio diversification is, I would say, also quite good. We're not focused in one particular sector, so we are acting through all the country in different business financings. Therefore, it's diversified between agriculture, manufacturing, trade, real estate, and others. And as you can see, the split of private individuals, also from the different type of instruments, it's renovation about 10%, the consumer financing 6.8%, and the mortgages, which I would mention that currently stands at a level of above 3% of our portfolio, but I would expect in the future potential to grow this business line, since we see potential for Šiaulių bankas to be a stronger player compared to our previous position in this business segment. Also worth mentioning that to reach this growth and to reach the level of close to 4 billion euros in our loan portfolio, we managed to grant of more than 700 million euros of new loans, and that's a really impressive figure for the bank to generate that volume of loan origination. Okay, the next slide is related with the commission and fee income from a daily banking mainly. So it's a strong performance in 2018, 30% growth compared to the previous year, and we reached 14.2 million euros of net fee and commission income in 2019. And I could not mention one particular business area that performed that way, that influenced strongly results. So it's a complex of mainly all positions that grew, including cash operations, payment services, account administration. So all of them performed successfully, and the increase of the revenue came both from the activity of our clients and the growth of our client numbers, as well as the reviewed pricing for different services. So the complex of measures allowed us to reach significant growth in 2018. I'm also proud with the results of foreign exchange operations. It's the growth of 23% to 6.8 million euros. So it's again additional nice diversification of Šiaulių Bankas income that goes with extra either costs or risks involved in this business, since we're mainly working only with the client needs when we talk about foreign exchange operations. Okay, a few words about risk appetite and risk management parameters. So the most important is the capital adequacy ratio, and we are working a lot with this parameter to keep it at both efficient and secure levels. So you see historical trend and growth of CAR ratio in the past, and also some projections for the future. So as you can see, the minimum requirement level currently for Šiaulių Bankas is 12.4%, and we set our internal risk appetite to be in the line of about 15%. And of course, the profit, which is in the light blue color, shows the also dynamics of the CAR ratio, including profit. So as you can see, in the end of 2018, we had 18% of capital adequacy ratio included a profit of 2018. And in the future, we'll also have some indication what our requirement for capital adequacy ratio will be. So we know that in 2020, in the end of this year, our minimum requirement will be at the 13.4%. We're also constantly reviewing our risk ranking of different risk that we manage in the bank. So currently we highlighted several of them as the high risks and high attention for the management and employees working with those risks. So it's IT and cyber risk, compliance risk, and concentration. So IT and cyber, probably we can talk a lot. It comes from different angles, from the infrastructure development, from the working with the vendors, working with the partners, and etc. So we're paying a lot of attention to this type of risk, because more and more transaction, more and more business comes from the businesses that kind of heavily dependent on the IT infrastructure. A compliance risk is also very important risk in general for the banks, and especially I would say AML risk is currently hot topic in the region. Therefore, we also highlight it as our high risk to manage and to put more investments into this area to tackle those risks. And the concentration risk, despite that our portfolio is well diversified, we are working not to allow any of the sectors to overcome too high levels of our portfolio diversification, and especially we're managing real estate and construction sectors, which we treat as with a higher concentration risks. Loan portfolio quality. So several indicators represented in the slide. So it's risk cost ratio, the cost of risk ratio development. So as you can see, 2018 was influenced by IFRS 9 impact at the beginning of the year by 9.7 million euros. And additionally, through the P&L, we counted 2.9 million euros of provisions, which I would say relatively small figure, and without IFRS 9 impact, our cost of risk stands at the 0.2% level. So I would say it's still relatively low. Of course, we know that current cycle is good for the banking, and the new loans are generated fast, and the cycle is still positive for the banking business. On non-performing exposure development, so in general we see downwards trend, despite that the last quarter had some slight increase by 0.2% compared to the third quarter, but I don't see any major signals that would make some major worries. It's actually two clients that influenced increase of this ratio, but I don't see coming losses from this increase, and I expect that it will potentially stay on relatively comparable level or even go down. Yep. As we mentioned before, we are, I would say, paying more and more attention to the area which becomes now of a very important risk element that currently, makes some scandals and important messages in the media about anti-money laundering risks. So again, I would say in general, I could mention that our key customer segments are private individuals and business clients from Lithuania. So we are mainly focusing on as a SME bank, and SME bank for Lithuanian clients. So historically, we haven't had any exposure to non-residents before 2013. But since bank grew not only organically, but we had several acquisitions in the past. In 2013, we took over part of Ūkio bankas, so it was insured deposits and some loans. So due to this transaction, some clients came along as insured deposit holders to Šiaulių bankas, but we performed a very comprehensive KYC procedure, just like from the blank page of paper, start working with those clients, and we refused the vast majority of clients that came as insured deposit to Šiaulių bankas. Therefore, the exposure to the previous Ūkio bankas clients, I would say, is absolutely minimal. And currently, our non-resident customer base stands at the level of below the 5% of total customer deposits. So our funding is also very little dependent on international clients. So we have historically used to be, and in the future planning to be, mainly be dependent on the Lithuanian private individuals and companies funding. And due to the current environment and due to the increased requirements in general, we continue to invest into the anti-money laundering IT system. So we will run different systems, and we are running already, but we're currently investing to the new one to improve the quality of tracking different type of transactions and applying different type of filters to track even more closer. Okay, so that's about the past, and let's move on to the page number 14, which is about Šiaulių bankas key highlights, I would say, of a strategic business plan. And we providing some extra information on the key parameters projections that we used building our strategic business plan. So return on equity, we consider not only for 2019, but for a few years more to keep at the level of above 15%. So it's still hard to say how much it should be above it, but it will depend on the situation's development. But currently we see that even with increased tier 1 capital, we would reach this 15+% return on equity. Cost income ratio below 45. Again, we're expecting to have less than 45%. Capital adequacy ratio, as we mentioned, we want to be above our risk appetite level of 15%. So it could fluctuate in the range of 15 to 17%, including the profit of the current year. And you're also targeting, as for our strategically two important business areas, it's a corporate financing, as I mentioned, SME and mid-cap companies. The market share that from the current 9% could grow to the 10% and more. So we hope to reach or even exceed 12% market share in 2021 in corporate financing sector. The similar situation with the consumer financing. So from the current 8+% of market share in consumer financing, we're expecting to reach 11% or more in 2021. And the same, we want to be the best serving clients company in Lithuania. So we are putting some targets on Net Promoter Score on a customer satisfaction measurement, which would be above NPS of 63%. So as already mentioned, strategic directions which are focusing is a corporate and consumer financing. Also, we consider mortgages as one of the potentials, as I mentioned earlier, to focus more and to make some adjustments in the processes and products. So service channels would remain the same, so we are still exposed to the branches, and I think we are almost the one bank in the country which holds very strong position on the retail network as well. We are investing a lot into the e-channels and developing all modern channels which are absolutely needed in the current environment. Okay, so we can move on to the highlights of SWOT. So we renewed SWOT, so we putting extract of that with the major elements which we see as our strengths, weaknesses, opportunities, and threats. So holding strong branch network, which is important not only for private individuals but SME clients, and SME clients is one of our long-term strength, and we see ourselves as a first bank to choose in the country for SME clients. Our strength of the customer service quality, we project that it will keep on this high level in the future as well. Historically, we were very strong on multi-apartment housing renovation, so we are, and we expect in this year and the coming years to maintain the leading position in that, and they're all the arguments that we can stay in this business for quite a long. On the weaknesses side, I would say the differently to the other international banks, we are focused on one country, therefore we are limited in scale, and to develop our IT infrastructure is it's a weaker side for us to deal in one country. We are in a country in the 3 cities, so it's a bit more logistic issue, but I would not say that it's a major one. And of course, compete with other banks for the best stuff is also the challenge. But I hope we're managing this weakness quite successfully. On the opportunity side, we are not fully utilized all possibilities of cross-sell among the Šiaulių bankas group companies, so including Bonum Publicum, including as Belizingas, which are subsidiaries, and there is a potential to do much more work in the group itself. We already started possibility to attract some funding from foreign markets. So we announced that we are entering Germany market indirectly to attract the deposits there. And in general, economic growth and current banking market and consolidating banking market allows Šiaulių bankas to grasp opportunity to fast further in a market faster than the banks, and I see that as a good opportunity last year, this year, and probably next year as well. And already mentioned a few times, the mortgage lending is the topic that could lead additional income for Šiaulių bankas. On the threat side, technology development. So it's a really dynamic and broadly expanding area, and to keep a pace with that, it's a challenge. So it is issue we need to consistently prioritize which investments are absolutely needed, which is not needed. So it's a continuous daily work. Of course, regulatory burden. That's not decreasing, but growing in different areas, and regulatory environment for the banking business is a burden that we need to cope. It's a part of the business model. I think we managed so far to do that, and hope we'll keep a good efficient approach to the regulation and fulfill all needed things without too much of a growth of the costs or risks with this regulatory part. And of course, despite that, competition from the incumbent banks is not that severe that it used to be when there are more banks in Lithuania. But new companies, especially financial technology, and new banks, mainly specialized banks, who are approaching Lithuania, it is the increase of a competition. But I believe with our business model, with our unique position in the market of being very close to the clients, will allow us to deal with this threat as well. Right, and now we can move to the third part of the presentation, which is related with the draft resolutions for the general meeting of the shareholders that would be on the 28th of March. So, firstly, I could mention about the dividend issue that we have. So it's as we're announced in November 2018, the bank implemented dividend policy aiming 24% or more payout ratio from the group's annual profit as a cash dividend. So current announcement for the general meeting of the shareholders proposes 17.4 million euros of dividends, and that stands at a bit higher level as 25%. So it's 1/3 of annual profit, and it's 29 cents per share. Which makes 6 times more dividends than the year 2017. And the yield of dividend would be 6.2% according to the current share price. And topic on the agenda of the meeting also includes the acquisition of the bank's own shares, and the proposition is of 10 million euros to put into reserve for acquisition of own shares. That could be used for two, I would say, roughly different purposes. One is the to preserve the market price of a share, and we assume to use that when we see, if that would happen, that some decrease of Šiaulių bankas price would show that it's worth to buy shares on the bank's book. We will have opportunity to do that. The reason for that, we discussed, different things happening in the market. That if something hits like a general trend of indexes going down, and the bank's share also follows, we will have opportunity to enter the market and to create some additional liquidity in the market, and to buy some stocks on the bank's book. And the formula is presented in the presentation, so I would not repeat that. As you can see, minimum and maximum level of acquisition, which is limited with a book value of a stock. And the second element which would be used for the same reserve will be used is for the variable part of remuneration that is decided for the employees. And I need to mention that we have this program already for the long time, from 2011. The only difference that the way of buying shares in the market was different. And I need to remind that the variable part for the risk takers, according to the European regulation, is must to be in the stocks of a bank if a bank is listed. Therefore, we are mandatory to apply that type of remuneration program. And as I mentioned, we're using it for quite a long time. The only difference is that historically, bank was buying shares in the market a different way, not from this reserve, but this way will be much more efficient and much more effective to do it. And definitely all the decisions related with the first and the second element of usage of this reserve will need to be approved by the management board. And the last slide shows the previous development of Šiaulių bankas stock. So we have quite a volatile situation in the last 6 months. So we have quite a strong decline in the end of the year, following the general trend of the stocks in the market. But last bounce up of the stock after the announcement of the results, I hope creates some additional positive outlook of a bank. Also seeing that at the end of the year we finished slightly below the book, 0.9%, and seeing in 2017 we were at 1.3%. So generally viewing the bank position and financials, I don't see reasons why the bank should be below the book. And hopefully, looking also to the target prices of analysts from Swedbank, Wood Company, LHV, I fairly believe that banks have a good potential to be above one book. So on this note, I would like to thank you for being patient and listening for the presentation, and definitely will be happy now with the colleagues to take your questions. And thank you once again for your active participation with the questions that we already have.
Okay, thank you, Mr. Sinus, for the presentation. Now we will proceed with the questions. As mentioned, we will start with the questions that were received in advance. Those we have 10. In the meantime, you can also send in questions online in the section on the right side of the screen. We have 20 minutes for the questions, so we'll try to progress as much as possible. So to start with the first question is, the total equity has been significantly increased compared to the liabilities after the conversion of the loan of the European Bank of Reconstruction and Development. The question is whether it is planned to increase the level of liabilities more aggressively. If so, in what ways?
I will take this question. Hello, everybody. And answering this, I can mention that bank liquidity profile, what we currently have, is sufficient to cope with this growth, what we are trying to achieve. And there are no need to be more aggressive in attracting funding. Therefore, so our policy will be to continue our activity as it was last year regarding the funding of the bank.
Okay, thank you. The second question is, please can you clarify the book value of the share?
Okay, again, I will take this as probably everybody knows the basic what is the book value, how book value of share is calculated. So it equity divided by the number of shares, and according this general formula, the book value of Šiaulių bankas at the end of 2018 was 0.45 euros. Sorry.
Thank you. The third question is how the share buyback program will be implemented. One time off share buyback offer or step-by-step process during the course of the year.
Yeah, so it's as I mentioned earlier, it's an opportunity with this reserve. We're creating only the possibility for the bank to enter the market where we see that it will bring value in some circumstances. So as I mentioned, also the particular decision has to be made by the management board when it's needed to take this action. And of course, there is a reserve that will be valid for 18 months. So it's according to legislation of Lithuania. And as well, once it's used, it's used. So we cannot, it's not kind of renewable. It will need to come back to the AGM and to be approved again. So we'll see how the situation develops during the year, and we see potentially it could be not used at all, or only the stocks for the employees could be bought, but as a instrument for the preserving the market price of the share, it could not be used at all if the situation doesn't shows that it's needed to be done.
Okay, thank you. The following question is, what will be the main revenue and profit drivers for Šiaulių bankas in the next few years?
So we are not turning the business model significantly of a bank. So the income streams I would expect would stay the same. So the first position would stay net interest income, mainly coming from the business client financing, and as we're in the trend of the previous years, we see that the easiest way for the bank to grow, to be very well focused further on the corporate client needs, refinancing some other banks' client, and also taking opportunity to take new clients in the market. So probably worth mentioning that current constellation of a competition allows us to attract new clients from other banks without very, I would say, aggressive either risk or pricing policies, knowing that the Danske Bank is exiting the market. Also, other banks are involved a lot in internal regrouping of the groups like Luminor, Citadel. So this environment allows Šiaulių bankas to be very well focused on the clients, growing organically, growing rather fast, but not at the price of a risk or lower margins. So I would say that's the major flow of income that we expect. Of course, other business lines like consumer financing, again, quite successfully developed business for Šiaulių bankas organically and through the acquisitions. We're holding the largest market share in consumer leasing business, and we're expecting that this position allows us to grow further in income. The other elements are much more diversified. The daily banking, the FX, and some other businesses that we are considered as additional, like custody services, that also would generate additional income for Šiaulių bankas. And the last but not least, as I mentioned, if we are successfully adjust all the needed things for the product and process related with the mortgage, I think we still have a good chance to be a strong player in this business in Lithuania as well.
Thank you. The next question is, do you see opportunities for profitable growth in residential mortgage market?
So I will not go very much on this question further, because I already mentioned a number of times that we see potential here, and we're working on this direction.
Thank you. The next question is already mentioned in the presentation, but still, what is your return on equity estimate and objective going forward?
Yeah, truly, as I mentioned, our target is to be above 15%. And if a year is successful, I believe we will reach that target, despite that after the conversion of subordinated loan of 20 million, that part of tier 2 moved to the tier 1, which is a part of the equity. And to generate return on enlarged size of the equity is more complicated. But on the longer run, we still have reserves to optimize the generated profit on the income, or on the equity, since we're not utilized anything on the tier 2 level. So if we would see that we need to enter to the market with the either subordinated loan or subordinated bonds, that would be a possibility to optimize our return on equity ratio. So we have some instruments how to be above 15% in the nearest future. Of course, if any strong storms would not hit the markets.
Thank you. The next question is rather long. Following the draft resolutions of shareholders meeting, bank might acquire own shares at the price not higher than the book value of the share. Such price limitation makes to believe that the bank is not worth more than one price to book, and at the same time limits potential for share price increase. Could you please comment why such a low price was set, considering the target prices provided by external analysts are significantly higher?
Okay, I will take that question. So while setting the formula for intervention when the bank acquires its own shares, we thought about the case when the market value of bank shares falls below the book value. And if that currently we are on the limit of that, by the end of last year we were 0.9. Now we are slightly above book value, but we think that intervene into market with the buy back program is reasonable when the market share market price falls below book value, and if it's above, so it's better to allow market to decide what is the true value of the bank share is. Therefore, that was our considerations while setting the formula for share price buyback program.
Thank you. The next question is, are there plans to change standardized risk measurements method to internal ratings-based method? Such a change might decrease capital need and at the same time increase shareholders' return.
Yes, it's the person who asked this question is right that it released some capital, but while deciding whether we go to this method or not, we should keep in mind also the cost of that transaction, and we think that this benefit what we get from this changing this method are not costs are higher than the benefit we would get. Therefore, currently we're not thinking about changing this method.
Okay, thank you. The next question is regarding the upcoming shareholder meeting agenda item on the rules for granting shares. I'm translating this from Lithuanian. The question sounds, if the rules for granting shares state that shares can be granted as variable remuneration for the management of the bank, can such remuneration be paid out from net profit, which belongs to all shareholders, including minority shareholders?
I'll try to answer this question. I believe partly already touched that it's a program that has already been for quite a while, that the shares are bought for the risk takers in the bank, and that's the difference that we now will use different method of buying those shares in the market. And having said that, I would say important to mention that all costs related with that, with acquisition of those shares, so all the accumulated costs are represented in the P&L account as a staff expenses. So in general, it will not influence directly the profit distribution of the bank. That's the only thing why it's needed, because according to Lithuanian legislation, bank can buy their own shares only when such reserve has been created. So that's I would name that more like a technical solution or different solution compared to the previous practice. So in general, nothing has changed. Only the way the stocks are bought in the market.
Thank you. That concludes our questions submitted in advance. We will proceed now with the remaining six minutes to the questions received online. So the first question is, could you please disclose formula of average shares amount calculation? Because I cannot come up to the number in the audited report, even when using two different methods.
Okay, yes, we can disclose formula, probably not during this webinar, but we can send the author of this question. But one should keep in mind that during the last year, the number of shares changed twice in Šiaulių bankas. Once was when it was capital increase from retained earnings, and the second time in the end of year when the EBRD increased its stake in Šiaulių bankas. But yes, we will share that.
Thank you. The next question is, what are the main currency pairs that contribute to the gains from foreign exchange operations?
The number one pair of currencies is not surprisingly euro-dollar, and second, but probably not significant as it. The first one is euro-Norwegian krone.
Thank you. The next question is, what has been the average cost of risk Šiaulių Bank has experienced in the past, and where do you expect it to average out over the cycle, given your current mix of assets?
Yes, the favorite question of analysts and investors who we are meeting with. So during the presentation, Vytautas mentioned in one slide this historical figures for cost of risk as we had during the last several years. And the maximum in 2014 it was 2.2%. In 2017 it was a reverse of cost of risk, but we estimate that during the cycle the average should be slightly below 1%. That was in the past, at least.
Thank you. And the next question is, what proportion of transactions flowing through the bank in 2018 were through accounts in the name of non-resident clients?
Try to this, but when we mention about percentage of customer base, which is below 5%, so similar percentage probably should be in terms of flows. But for more exact figures, so we should look and check this properly, and probably in the future we could disclose this breakdown as well in our presentations.
Thank you. A related question is, how much of those 5% of non-resident depositors are from EU versus non-EU?
Again, this breakdown is not, we have no currently ready, but I could mention that out of this 4.7% what we have currently in our deposit portfolio, 2% are households deposits, mainly private individuals and companies which belongs to private individuals. So the remaining less than 3% are from both EU and non-EU countries. But again, we see that this topic is interesting for audience, so we will provide even more information in the future. The retained profit after payment of dividends will be used for support bank growth, what we targeting to keep pace similar what was in the last few years.
Okay, and since we are running out of time, the last question is, what level of NIM should we expect going forward?
that we see that our net interest margin will remain at the current level, what we managed to keep stable during the last few years, and we will continue that way.
Okay, we have the last two remaining questions, so we'll run a couple of minutes our overtime, but we'll try to answer them. So the last two question is, there was an announcement that Šiaulių Bank will start offering services for German market. What opportunities do you see there, and what are their expectations?
Yes, that there was an announcement of that, and we see this this source of possible funding as an alternative, not the main one. So that just broadens our customer base, and in case of necessity, we can raise more funding if needed. But as we mentioned earlier, so there are no such need currently as a alternative source of funding.
Thank you. And the very last question is, will EBRD exit as a shareholder of Šiaulių bankas? And if yes, when and who could be the new shareholders instead?
Yeah, to answer this question, probably BRD would be the best institution to be asked. So we enjoy having this institution with us for many years, but definitely they are invested not for forever, and one day they will potentially could decide about exit. But currently there is no information about when and how they are planning to exit. But having the diversified shareholder structure, we think we can manage work with a different type of investors in the future.
Thank you. That concludes our question and answer session and our overall webinar. Mr. Sinius and Mr. Savickas, thank you very much for participation and for your information. Just a reminder to a participant that recording of the presentation will be available in the Nasdaq Baltic YouTube channel, webinar playlist, and at the company's website at www.sb.lt. Thank you everybody for participating, and have a nice day.